Hey, what's up, my beautiful people? It's your boy Devo, some motivational, back with another day trading QQQ recap today. And honestly, I'm so glad to be back. I feel like I haven't been on here in a while. And honestly, I miss you guys. I miss being on here with you guys, all right? And so today we have a lot of good news. Well, not a lot of good news. We have a lot of news. Um, Actually feeling good. I had a small winner today. Nothing to run home to mama about, but it was practicing my strategy, just just reiterating how my strategy works, and I'm gonna go over it with you guys in the market. But first, I want to go over the news that we had today, and so it can show us why the market actually reacted the way it did. And then we're gonna go over some news that we have coming out tomorrow. Excuse me. That honestly, it's big news because it's earnings. We have earnings tomorrow, but because overall we know we're in this whole tariff talk and a whole bunch of uncertainty in the market, these earnings they won't really do much, right? It will be a good sign to see companies have good earnings in the midst of these tariff talks and these inflations and all these, yeah, exactly, tariffs and stuff. With all these tariffs going up, we know that hurts companies that get their parts from other countries, right? And so if companies are still having good earnings, that will be a good sign. But ultimately, we could still see drop in the market because of a lot of uncertainty and possible recession. Okay, and so let's get straight into it. Okay, so to start the day, we actually seen this on Thursday. Trump, I don't think these comments weren't on Thursday, but on Thursday we know Trump was saying that he can't that Jay Powell, our Fed, Jay Powell couldn't get fired fast enough. Okay, so basically he was calling for him to get fired, and he said if I wanted him fired, he would be fired. Okay, and that is not good news. Okay, the market does not like that because Jay Powell, Jeremy Powell, he doesn't work he cannot be fired by no one man. He can't be fired by the president. And that's kind of like, wow, the president's supposed to be like the head boss, right? But no, Jay Powell is his own little thing. He's the Fed, right? He's in charge of the basically the whole monetary policy of the US. He's in charge of rate cuts, controlling our economy and making sure inflation don't get out of hand, and being able to control the economy, make sure like we don't fall into a recession, and if we fall into a recession, to get out of it, right? Because right now we are getting things like all these tariffs, and we're getting slower GDP because of these tariffs and things like that. And so the Fed is here to help us get out of those things. And he's a big thing, right? But he cannot get fired by the president, okay? And so Trump saying that if he wanted him fired, he would be fired, and saying that he can't be fired fast enough, that's not real good news, okay? And then this news came out. President Donald Trump on Monday, which is today, ratcheted up his pressure campaign on Federal Reserve Chairman Jerome, Jerome Powell. I thought it was Jeremy. Sorry about that. Jerome Powell, calling him a major loser and warning that the U.S. economy could slow down unless interest rates are lowered immediately. Preemptive cuts in interest rates are being called for many by Trump. By many, Trump wrote on Truth Social. Then Trump claimed that there is currently no inflation in the U.S. and the cost for energy and most other things are on the decline. And trying to, okay, yeah, that's extra stuff. Yeah, so that's what Trump said. Trump said that about the Fed, and the markets do not like that, right? Because if if Jerome Powell does end up getting fired, that would just not be a good look because we're kind of in this whole situation because of Trump. I'm not saying I agree with it or disagree with it, but the whole tariffs and everything and the inflation and slower GDP that is going on because of the tariffs. Okay, agree with it or don't disagree because he's trying to bring manufacturing back to the U.S., which is good, right? Because we need to have manufacturing. We need to be able to have these things in the U.S. because everything was being produced in China and other countries and everything else, right? Where it was basically like in probably in 50 to 100 years, the US would basically own nothing, right? Because the chips were being made in China, the phones were being made in China. Like all the important things that the US uses are made in China or made in other countries, okay? So Trump is trying to bring manufacturing back to the US. He's trying to make us the home of these things, right? And so in the midst of that, there's a lot of, a lot of pains, right? There's going to be a lot of pains to start off, and that's basically what he's saying, and basically what we're feeling, because inflation is going to go up with these tariffs. So we're going to be feeling it if we're not already feeling it. And GDP is already dropped from last quarter. This quarter, it's about to come out. I think what 3 6. So in June, it'll come out. Our second quarter GDP, and we know if we get a two quarters of negative GDP, that is considered um, a recession, right? And so Jerome Powell was basically, he came on, and remember last week when I said I didn't even know he was talking, he said that he wasn't going to cut rates, that we were in a stagflation period. A stagflation period means higher inflation and slower economy. So that means we're spending, or inflation is up, and our economy is also slowing down. And then he also said that he can see um, unemployment rates jumping up. Okay, so he can't cut rates whenever we're already higher inflation, right? Why can't he do? Can't he do that? Okay, so in the 70s and in the Great Depression, we've already been through those things. Okay, so whenever we were in the midst of a depression, the Fed cut rates and they gave out checks to basically try to help us get out of those things. Okay, and what did they ultimately do? It ultimately puts us in a deeper recession, right? Why does that happen? Because if we have inflation up and GDP is down, that means the economy is slowing down. That means companies are slowing down. They're not getting as much revenue, right? So whenever the companies are slowing down, they're not getting revenue. They can't pay the employees. So that's why the unemployment rates jump up, right? And so if we still have inflation up, that means prices are high, but people are not getting no money, and people are getting laid off, less money. That means we're just in a serious decline. We can't pay for nothing because the prices are up. They can't cut the rates, right? They can't cut the rates. And then why can't they cut the rates? Because that is why can't they give out the checks? Why is that not good? Because that is putting more money in our pocket, and whenever they put more money in our pocket, that's going to put more inflation. You see what I'm saying? So if the inflation is already up, stay with me. I know it's long. It's a kind of a tedious process, but I'm just trying to kind of explain like a little bit of the background into it, why it's like a big thing. So if GDP's down, unemployment's up, inflation is already up, skyrocketed, right? If they give us checks, that means we're going to have more money. We're going to get money to put into the economy, right? But that's going to cause inflation to go up even higher. You see what I'm saying? So it's still gonna, you see what I'm saying? So it just keeps stacking inflation, right? If inflation's already at 4%, they give us money on, inflation's already up, right? But they give us money, inflation's gonna shoot up even more. Or if they cut rates, the inflation's gonna shoot up even more, right? So they're trying to wait for the inflation to come down so then they can cut rates. You get what I'm saying? So it's a little tedious process, you know what I'm saying? Probably not exactly on it, but it's somewhere around there, right? Because I'm still learning this stuff, but that is kind of the gist overall of these things, okay? And so let's just go straight into the markets and get off these politics, right? But that's just basically why we do have a big drop in the market, right? We started at this 488, we dropped down to 427, right? And once again, price respects these zones. It respects these supports and resistance areas. I'm telling you, this is why you mark them out. And I know you're saying, Devin, if you know it, why aren't you capitalizing off of it? It takes a lot of practice. It takes a lot of practice, and I've been I've been trying to capitalize off them. As you know, I've had some good trades. The past week, I had some good entries. Prices didn't go my way, where it stopped me out and then went my way, right? But I know these areas, and you got to know these areas because you're gonna see that they react off of these areas. You just have to get in at them and capitalize off them, okay? And today was honestly a B plus entry, and I'm gonna show you where I got in at. Where if I would have stayed in, I would have wrote it all the way down, and it was a perfect entry. I got in at the perfect entry. I just got out. Why did I get out? I just wanted to lock in profit. I didn't want to lose a trade. Honestly, like if I'm being straightforward, I didn't want to lose a trade. I didn't want to lose a trade. Once I seen a little bit of profit, I'm gonna show you I seen a little bit of struggle. I got out. I got out, right? And I could have been up hundreds of dollars today, but I'm not mad. Why? Because, okay, I hope y'all can't. Let me turn that down. I don't want y'all to be able to hear the fan, but I'm getting a little hot. Why am I not mad? Because the market's gonna be open tomorrow. And what did I ultimately do? I got in, and I seen market went my way. That was a B plus entry. Only reason I'm not seeing an A plus entry because I didn't get no type of misdirection or nothing. It was just a straight drop, fair value gap, came up, tested the fair value gap, and just kept dropping. Right, there was no type of uptrend to sweep a high and then a change of character. It was none of that. It was a. That's why I didn't call it an A plus entry because A plus entry you wanted to give a some type of misdirection sweep and then change of character, then my pullback into my fair value gap, and then continue the trend. Right, that's like A plus. But this was like honestly A minus. Like this is honestly as good as it gets. You know. So I'm gonna show you after I show you why I have these support areas, so you know I didn't just randomly mark them out once price started doing some type of move, okay? And as you can see, I still got these support areas, right? I still got support areas down here. So we're gonna see in the future if price respects them, right? So I had this one right here. Why? Because this was where we had our 50% wick. Oh man, I have a lot of, I'm gonna delete these, right? Just so there's not too much lines on. So I had this top one, right? This was the area of resistance. Sorry, so let me turn it green. I mean red. This was the area of resistance. We opened up today at 421, right? So I had this area of resistance. Why? Because these were wicks. These were where buyers were at, right? But we opened under it. So it turned from support to resistance, right? And then I had this area of other support. Oh man, I'm kind of lost right now. Oh, okay, my bad, my bad. At 4:30, my bad. I'm thinking about the spy because I also have. Sorry about that, guys. Stay with me. Cause look on my spy, I have them too at 5:20 and stuff. So I was thinking, hold up, wasn't it at 5:20? But no, I'm on the QQQ today. So this is what I traded today. I traded the QQQ. Sorry about that. Okay, so had this area of resistance, right? Because it was support, but we opened under it. And then I had this area. Why? Because this was at this wick, also the top of this candle. I have area of resistance right here. Not in the daily, but on my 15 minute. When we go lower into my time frame, you'll see why I had it. I got another one down here. Why? Because this is where this bottom of this wick is. And this is golden. This is a golden one. Right here, I have a 427.52 one resistance. This is the middle of this freaking, well, not the middle, but a little lower area of this big candle, right? So you just got to mark out those areas. Then right here is at the bottom of this candle, right here at the bottom of this wick, and then another one at this wick. And honestly, if we break right here, we are gonna fall. If we break this 427, we have a chance of falling, okay? So let me come to my 15 minute. Oh yeah, this is why I had it right here as well. And you see how it just respects these areas. Cause look, I marked it out. Why? Because this is where we had this little right here. Cause this is like kind of like an order block right here. Not kind of, this is really like an order block. So I just put a line right here at the top of that order block, right? And what did price do? It came near this area and gave a reaction. So man, you see how you gotta mark out your areas of support and resistance so you can know where prices potentially give a bounce or where you're getting your retest at and everything, okay? So now let me go into the good of the day. Let me go into the good of the day, man, because this was awesome. Even though I made 15 bucks today, I made 15 bucks, but it's not about the money. It's about the practice because the money is always gonna be here. The market is open 282 days out of the week, if I'm correct. 282 days out of the week, somewhere around there. 282 or 252, one of those. 250 plus days of the week. I mean, of the year, sorry. There's a lot of money to be made, okay? So you don't have to, if I don't hit this move, there's going to be tomorrow. There's going to be Wednesday. There's going to be Thursday. There's going to be Friday. You know what I'm saying? Just you want to make sure you practice your strategy, know your strategy, okay? Because the money is the byproduct. It's the byproduct of having the skill. It's the byproduct of having the strategy. Sorry about that. The Okay, sorry about that, guys. Give me 1 second. Give me 1 second. Sorry about that, my good people. So, again, money is just a byproduct of having the skills, of having the disciplines, of having the strategy, of having the management. If you have those, the money comes. The money, these things attract the money. You see what I'm saying? So if you can master and keep practicing and become very good, and like I said, master these four things, the money will come. And that's what I know. You know what I'm saying? So I'm not worried about, oh man, if I would have. I mean, obviously, it would have been nice, right? I mean, obviously, I did think like, oh man, if I would have stayed in this move, I would have been up hundreds of dollars, right? I could have added to my size at this pullback and made more money. You know what I'm saying? Obviously, there was a lot of money because this is what 439 to 427 move at the very bottom. Even if I got out like at this area of support, maybe if I got out right here, 438, 439 to 433, $6 move. That's home runs. But me getting out, but then also seeing that the trend, I mean, price reacted the way I knew it should have reacted, or reacted off of my strategy that I like trade, that I consistently trade, and I tell y'all, and I wait for every single day. To see that it showed up, I got in. I ain't even gonna say I was a little. I was scared, right? I, I didn't want to lose the trade, but to see that it actually respected my fair value gap, it respected my area of support, making it a resistance. To see these things actually play out and see like, man, that one really would have worked. It's all a confidence booster, right? So you got to practice these things, and money will come. So I'm not even worried like, oh man, I didn't make the money today. Well, it's gonna be open tomorrow. I know my strategy works. I know I have the discipline. I know I'm gonna have the risk management, and I don't know what that fourth one honestly was. Discipline, risk management, strategy. Y'all know the fourth one. I just said it, but I forgot it. Okay, but I know the money will come if I master these things, right? And so look, let's see where I got in today. Okay, so today, what did we have? We opened up under this area of resistance, right? This 442 resistance, but we opened right near this support. Perfect. That's honestly perfect. Why is that perfect? That is literally like a perfect setup. Why is that a perfect setup? Because you're literally opening near your support. So it's either going to show you a bounce off your support, or it's going to show you a breakthrough of your support, making it a resistance, right? So it's like you want to see it do that. You don't want to see it kind of in the middle, because if it's in the middle of both, it's kind of like, you kind of got to wait for a trend to one area. And then if it hits that area, you got to see if you get a change of character, or if it hits that area and it breaks through, but you're kind of already far up the move. You see what I'm saying? So when you're near it, like right near it, right near the support or right near the resistance, that is like golden, okay? And so look, I was right near the support, and what did price do? To open up, gave a little just indecision area for dropping down, broke this area of support. What did it do? Test it, test it, test it, gave this wick into what? Into this little gap right here, right? because we had this big wick as well, but then it's coming up, testing this area of support, making it a resistance. So let's turn it red. We made support resistance, also cleaning up this little gap. You have a little gap right there. Yeah, it's a small one, but you got a gap right there. And you could also have a little gap right here. All right. And my stop loss would have been up here. Right? Why? Because if price broke that area, I'm knowing, well, it wants to make uptrend, right? Because I have my area of support, which making it resistance. If it breaks past this resistance, then breaks past the whole trend, the higher high. If it breaks past the higher high, and then also breaking this support, previous support, which is a resistance now. If it breaks this resistance and then breaks that last higher high, well, it wants to go up, right? I mean, my bad. This is a lower high because we're in a downtrend, right? My bad. Sorry about that. If he wants to break that lower high, also break this. If he wants to break this resistance, then break this lower high. Obviously, it wants to go up, right, and make higher highs and higher lows, right? A plus. Where did I got in? I literally got in at this wick. Price, doom, doom. But this was a struggle going down. I'm not even gonna lie. From 440 to 447, it was like just struggling down. And I know this is where Devin, you got to be patient. You know what I'm saying? Because it was struggling down. It was giving a whole bunch of wicks down. I was like, oh my God, man. And I got out. I got out right around here. I'm being so serious. I got in up here. I got in at these wicks and got out right around here. And I know you're saying, what are you doing, Devin? I was nervous. I didn't want to lose the trade, if I'm being real. I had the perfect setup. A B plus setup. I'm not going to say perfect, but a really good setup. B plus. I just didn't want to lose the trade, okay? But that's okay, because what did we see? Price came up. It wouldn't have stopped me out, because why? My stop loss is up here, right? It came up, wicked, respecting this area of resistance, which was previous support, before dropping, man. You see this, dropping. And then gave an area of range, dropped again. And then once I seen this and it start to itch up, give this solid candle right here, this would have been a sign to get out. Because I don't need to hold it for this pullback. After this right here, this is already a 437 to 432, 433 drop. You're not going to always see $10 drops, you know what I'm saying? So once you see like a little uncomfortable, you start to see a solid candles kind of come up against your way, you already know you're at support, call my trade, you know what I'm saying? That is profits. And that's what I'm saying. Man, I could have been up some hundreds of dollars and came here like I had $100. No, it would have been more of $100. And I only had one contract. So it would have been about, if I would have had this whole move, it still would have been about $200 to that one contract, because that is a $6 move. You know what I'm saying? So that still would have been big money. But imagine if I had two contracts. Imagine if I would have had three contracts. That's $600 off of what? 1430, 13 off of like 40 minutes, literally. So that's 850. If I would have got out right here, 850 to 920, 30 minutes, $600. That would have been about $600 if I had three contracts. If I had one contract, it would have been about $200, $100 and some dollars, over $150 with that move. That is payday. So you're seeing how. Well, you're gonna see in the future. I'm gonna bring results in the future, but I'm just showing you this, and I'm just kind of predicting what that price number would have been. Obviously, I was looking at the contracts; they went up hundreds of dollars, but you will see in the future. I'm gonna show you the results, but right now I'm showing you the journey. I'm showing you me practicing these whole things, okay? But I'm telling you, if I would have had one contract and wrote it down, I would have been up probably about $200. But that's just one contract. If you have two contracts, you would have been up double. If you would have had three contracts, you would have been up triple that. If you would have had four, you see what I'm saying? So that's how these money gets printed in these markets. You see what I'm saying? So I got out at this struggle, and what did price do? Came back, wicked at this area, and dropped straight down. I had an area of support. it did not respect the area of support. So you see how I'm not just marking out these areas because I seen a reaction and I want to say I called this area. No, I had this area of support right here. It broke through it, but I had that support area because I want to know, okay, if I see price react off it, if I see price react funny and get some strong candles, I know to call it because I was at an area of support and everything. You see what I'm saying? So I'm not just marking out areas like, okay, I seen it react for you guys. No, I already had the support here. It didn't respect it. It broke straight through. Hey, that's good for me. I'm gonna hold it down until it wants to respect the support. I have my other area of support right here. Came down, respected it. But what did it do? It respected it and gave a pullback. For these sellers, took back over, knocked it back down. It was using the support, knocked it through, and what it was doing, just coming down. Gave a little pullback, tried to come up, knocked it back down, and now it's respecting this area of support. You see what I'm saying? It came back up, and if price actually wants to continue at this support tomorrow, if it wants to break this support, it can fall all the way back down to the 427, which I do predict tomorrow we can have another downtrend. I do predict. Oh my God, I keep saying predict. I do predict tomorrow we can have another downtrend. We could have some type of move upwards and making this area of resistance before getting us knocked down a little further because we do still have a lot of bad news. We do have earnings tomorrow, okay? Let me show y'all. So tomorrow we do have Tesla earnings, but that is when the market closes. So, I'm not sure what we're going to see for Tesla. You know what I'm saying? We might get probably ranging, but at the same time, with all this uncertainty, with Trump's attacking Powell, the market does not like that. Trump attacking Powell is not good. The market does not like to see that because if Jay Powell gets fired, that is showing that the president has power to fire somebody that is not even under his control. Because remember, the Fed does not work for the president. The Fed is an independent. It's an independent. Trump did honestly, what is the word called? He recommended and was like advocating for him to get into office his first term. When Trump's first term, being president, he actually advocated for Jay Powell to get in as Fed, and that's honestly when Jay Powell did get in as Fed, and now he's turning against him, saying he's a loser. We see this right here. He's a major loser, and he was calling him a major loser, and that he can't get fired fast enough and stuff. Okay, but ultimately, honestly, not agreeing or disagreeing with what Trump is doing for the America, the MAGA, Make America Great Again. I'm not agreeing or disagreeing with it, but I'm just telling you what's happening, and so that's just not good, right? If we see that he has power to fire somebody that's not even works under him, you see what I'm saying? And then also, what is some other news that we know tanks the markets? Well, gold prices steady near record high, past $3,400 on Trump Fed clash trade tensions, right? So we're still under the trade tensions, the Trump Fed clash, and it's honestly getting really bad. So the market does not like uncertainty. We're going on 2-3 months of this since February. So what? February, March, April. Going on 2 months, about to be 3 months. It's about to be January, February, March, April, May. It's about to be May. Jesus Christ. It's about to be 3 months into this. The market does not like uncertainty. And I told y'all a while ago, I can see us testing this low. I can see us testing this low, okay? I can see us testing this low or going even further, okay? If this stuff keeps going on, the market will tank even lower, especially if we get into a recession, okay? The longer this goes on, the longer the GDP is going to slow down, right? Because the longer this goes on, the more we're having trade tensions and higher tariffs on countries and China, mainly China, and China back at us. And we know we already do a lot of stuff in China that is going to slow down our GDP, lower GDP, higher unemployment, high inflation, recession, right? And recession, we will tank. I'm telling you, this market will tank, okay? So what did I do today? I practiced my strategy, got in at this fair value gap and also a resistance. If I would have stayed in, which I'm not, I'm kind of mad that I'm not mad, but obviously I would have liked to been able to capture off this move, but I'm going to. That's the thing. It's going to come. I'm being patient right now. I'm just being patient with it, showing y'all the process, being patient, basically just going over my strategy over and over and over, going over my strategy, making sure it works. I know it works. The most successful traders in the world trade supply and demand, order blocks, fair value gaps, and all these things, right? And so I know it works. I just gotta keep practicing it, and keep practicing it, everything. Okay. So that's pretty much it. We went over. There was something else I had to say in my head that, whenever I was just saying that, kind of went out. Excuse me. Oh yeah, the gold. So the gold price is being high. Why is that a thing? So when the market tanks, gold always breaks new highs. Gold goes up whenever the markets go down, right? So if we see gold coming down, that means the market is going up, okay? Why is that? Gold is a safety net. Gold doesn't go up in price. Gold doesn't devalue. Gold is like, that's why Bitcoin is such a big thing, because people call it digital gold, right? It's an asset that will not it's just a safety net. Like, it's an asset that doesn't go down in value, right? And so when people start to pull their money out of the market, they start to put their money in gold, a safety asset, right? And so the market always pulls money out of the riskier things and puts it in a safer net, right? So that's why you see crypto tanking, right? Because that is even riskier than stock market, right? So you'll see crypto tanking, and then if the market is tanking, crypto is tanking. You see what? So if the market is down 20%, we see crypto is down 50%. Besides Bitcoin is digital gold. That's why it's doing so good right now. Still, it's at 84K right now. Still, it's digital gold, and so that's why we see these altcoins and meme coins down 70%, 50%. Ethereum's like down like freaking 70% right now. Ethereum, Jesus Christ. You see what I'm saying? And so crypto will tank even harder because it's a riskier asset. The market will fall like it's doing. It's down 20%, and it possibly could drop to 30% down. And we'll see gold pick up, right? But ultimately, when these things are worked out, gold will come back down. It will come back down in price, and we will see the stocks and crypto start bouncing back up whenever we have more certainty in the market. So that means people aren't as worried, right? So they'll start having more risk on. But ultimately, that will be a lot to come, right? Because we will need rate cuts. We will need Trump to say, okay, deals are worked out with China. Well, that would be the first big thing. Trump saying the trade tensions are off and everything's settled, right? We worked out a deal. And then the next would be rate cuts, right? Rate cuts for the economy, right? Because we haven't had rate cuts, I think, this whole year yet. It'd be rate cuts, and that will ultimately fuel the economy, right? And we will see, because we are so far down, we will start to see these big moves up. We will start to see some huge moves up, huge green candles. Once those things happen, but currently, I think we have a lot of pain to still endure, right? I see us testing these lows, and tomorrow I could see us, if we start off around here, where price ended off, I can see us trying to test this area of resistance before knocking down, or maybe we'll just knock straight down and make this a resistance. But I'm ready for it. I am ready for tomorrow, okay, guys? I'm so excited for tomorrow. And honestly, I'm excited to be back and making a video for you guys, you know what I'm saying? I love doing this, you know what I'm saying? I just love it, guys. And I love being able to teach and learn these things and be able to teach it for you guys, right? And so there was another thing I was just thinking about again. Man. And so tomorrow, I don't think we have much news. We don't have much news. Remember, I gotta make sure to look at this news. So this is where I learned, right? I didn't look at the news, and I missed a big old move because the Fed was talking. Tomorrow, I don't see much news coming out. Okay, now I know back what I was thinking about. Okay, don't see much news, but we do have earnings on Tesla tomorrow, which could be pretty big. But the earnings on Tesla isn't going to move the whole market, right? But if Tesla has good earnings, that would be good for Tesla, okay? So what did I do during this drop? Well, I DCA'd. I DCA'd into investments I thought were good, right? And yeah, I could see it's dropping a lot more, right? I could see it's potentially dropping a lot more, but that's why I DCA'd in investments, dollar cost averaged. I didn't just throw hundreds of dollars into an investment right now. No, I put $25 in, $50 in, because I know tomorrow we could have another big move. So tomorrow I can maybe put another $25 in. And what did I invest in? I invested in Meta. I invested in Tesla. I already have a big position size in Nvidia. Not that big, but big for me. You know what I'm saying? Right now I have big Nvidia, so I'm trying to kind of catch up my Meta and Tesla positions. And there's also some other other companies I want to invest in. Right, so that's what you want to do. Whenever you see these big sell-offs, when you see 20% discounts, you see 50% discounts on companies, you want a dollar cost average, not throw your whole wallet and whole paycheck in the asset, because we're not out of the woods yet. We could see a bigger drop, right? But you want a dollar cost average, right? Especially when you see, let me just show you real quick. Especially when you see Nvidia's high was around $150. We know Nvidia is the semiconductor king. We already know everybody uses Nvidia, right? They use their chips. Nvidia is the biggest chip company out there, right? Jesus Christ, where is the freaking? Oh, it's right here. Okay, so Nvidia. Oh my God, Lee, look at that. Its low was at 43%. 43% down from all highs. So you're getting and if it breaks this, you will potentially get about a 50% discount on Nvidia. That means whatever money you put into Nvidia, you will get 50% return. So if I have $200 in Nvidia, I will get $100 once it reaches that all-time high. And it won't reach the all-time high. It's gonna break the all-time high. It's gonna make new highs. That's what the market does. It has to fall so it can have new highs, right? So that's what you gotta look at. We're not looking at 50% discount on this new shirt or this new game or this new console. We're looking at 50% discounts on assets, things that are gonna make us money, right? Things that are gonna get us. The market investing is what's gonna get you generational wealth, right? So that's what we're looking at. Nvidia, what I invested well, I already have a pretty big position size. Honestly, my average cost of Nvidia is 110, so I'm down 100. So I'm down 28% from the all-time high. But I am gonna add position. I am gonna add size to my Nvidia so I can get a lower average price, right? Because my average price is at $110, right? But I want to get it. I want to. If I wish, honestly, I would have had my average price at $86 because that is a win, right? But obviously, you keep dollar cost averaging. Put $25 in. Maybe next week, well, you want to get it while it's red, right? That's why you want a dollar cost average, because we never know when Trump is going to say, okay, trade talks are off and price is going to bounce off, right? So you don't want to miss these moves. That's why you don't just say, okay, well, I think a recession's coming. I'm just not going to buy it. Dollar cost averaging, dollar cost average. Put $25 in, $50, whatever you can put in, but don't throw the whole paycheck in. Make sure you have cash on the side to keep investing for more downturns, right? So my average cost is 110, but obviously I'm dollar cost averaging in. I'm dollar cost averaging in so I can lower my average price and so I can get a bigger return, right? Whenever it breaks up. So let's look at Meta. Meta, oh my goodness, Meta's a good one. Meta is a company to be on the lookout for. It's low, 480, down 35%, right? What is my average price for Meta? I got it good. My average price for Meta is at 498. Yep. Don't have too much money in, but I'm down 32% from the all. Well, I'm not down 32%, but Meta is down 32% from its all-time highs. And so I'd keep dollar cost averaging in, lowering my average price, lowering my average price. And whenever it keeps dropping, I buy on the red days. Dollar cost averaging, dollar cost averaging. Just keep putting a little bit of money in, a little bit of money in, just upping my investment on it and lowering my average cost. So whenever it does bounce all the way up, I'm gonna end up being, say it bounces up tomorrow. Well, I got in at my average price is 4.98. So say if Trump says, okay, talks are off, I'm gonna get 32% of my money because it will reach the all-time high eventually. I'm not saying once Trump does it, it's just gonna bounce to the all-time high. It will be a little struggle, but it's gonna get there, right? I will get 32% for my money, and then it's gonna break a new to all-time high, right? So 32% of my money, and then say if it, Meta is $1,000 stock in the future, but let's just go to 850. 32 plus this 16%, I'm getting 50% back on my money, my return, right? So you see what I'm saying? Now let's go to Tesla. I also added some more Tesla, right? I can see more downturn in Tesla, but where are we at in Tesla? We are down 50%, 55% from all-time highs. I'm letting you know Tesla is $1,000 stock in the future. Tesla is a robot company. It is going to be, it's going to have robots on Mars. This is $1,000 plus stock in the future. I'm telling you. So I'm getting it. My average price on Tesla is $239. So I got it literally at 50% down from its all-time highs. But I'm gonna keep dollar cost averaging. If it wants to drop some more, I'm gonna keep dollar cost averaging, right? So say if it, say like on my other example for Meta, say if Trump said, okay, talks are off, right? We're not gonna have no more downturn. If he says talks are off, there, these sell-offs it's gonna end because it's already, all these companies are already so far down. You won't get a further drop if Trump says, okay, talks are off. But if he doesn't say that, we end up in a recession, we will drop more. But for this example, just like I did in Meta, say Trump said, okay, all talks are off, right? And we start to bounce. Once we reach that all-time high, I'm going to be up 50% on whatever money I have in, and we know it's going to make a new high. I'm not even going to go to the $1,000 yet, because the $1,000 is a couple years into the future, right? Say if it goes up to $630. I'm going to have 50% plus this 28%. So I'm going to have 78% of whatever money I put into the market. So that is how you build wealth, okay? And obviously, I'm not there yet. I'm not a millionaire, billionaire yet. But these are things I'm learning and things I'm seeing. And these are opportunities of a lifetime. So that's why I'm showing you it before these results come. You see what I'm saying? Because millionaire status is on the way, not just for me, but for all of y'all beautiful people. If you just take the time to learn these things and actually see what I'm saying and study for yourself. I'm not saying just, okay, Devin said this, I'm gonna just do it. No, like, hear what I'm saying and then go study it on your own so you can see what I'm saying and just know it for yourself. But this is how you build wealth, okay? And so that's pretty much what I wanted to show you. Just a little bit of the investments, what I did on this huge red day, and how far we are down at dollar cost average into some investment companies that I feel like are going to be very profitable and very big and long term investments. Remember, these are not, it's not a year. We're not thinking about a year now. We're thinking about 5 years from now. We're thinking about our future 5 years from now, 7 years from now, 10 years from now. Obviously, I can see these stocks performing really well in the next 2-3 years. But I'm just saying, you got to have that overall 5-year vision, 10-year vision in the future, okay? Because that's what's really going to build you generational wealth, right? You got to work for generations to build generational wealth, but it will come and it will be worth it, right? So I showed y'all where I got in at. Oh, this is the spot. I showed y'all where I got in at, why I got in, fair value gap, and a resistance area, right? I showed y'all that my strategy works, that it would have worked if I would have stayed in. I would have printed money. Not mad about it, right? Just practicing, right? And we mark out our zones, and we're ready for tomorrow, right? We know we have the earnings, which that's going to be after the market, so it's not going to really be a big effect. We know to make sure to watch our news to see what Trump is saying, because whatever he says moves the markets. And we know why we had the sell-off today, and we know how to get into our investments and what to do. Dollar cost average into our investments, okay? So that's pretty much all I have for you guys, right? Not too long. Well, it probably was kind of long, but a lot of valuable information. I just like to get on here and tell y'all what I learned and what I'm doing, right? Because ultimately, I want to be able to teach you guys and make us all money, right? I want to make money, but I want to be able to get you guys money, right? Remember, guys, we got to get paid, right? And so that's pretty much all of it. Remember, I love every single one of you guys who are with me on the journey. All the comments, all the views, all the likes, it never goes unnoticed, okay? And so remember, guys, stay persistent, passionate. Make sure y'all get paid, all right? Peace.